The Banking Scene Director's Cut goes behind the scenes, sharing stories and insights to help you build the bank of tomorrow.
Today, we're in conversation with Adam Preis, Director of Product Solution Marketing at Ping Identity. Welcome to the show, Adam.
Thank you, Andrew.
I'm going to dive straight in because I recently read an article that you published about third-party access being the cornerstone of scalable embedded finance. Now, why do you believe this is such a critical issue for financial institutions today?
Well, Andrew, it's a very good question. And fundamentally, third-party access historically, not just in financial services industry, but beyond, has been traditionally managed either within the customer identity and access management silo or the workforce identity and access management silo. And what's happened is that organizations have really they've not really had historically a big issue about giving third parties access to the back end, sometimes the front end or the meta end, right? And so they've kind of developed these capabilities in-house, or they've used either customer or workforce identity solutions to perform that function. The reality is now that we live in a completely different world where in embedded finance, the third-party ecosystem has grown so rapidly that there is a multitude of third-party actors that need access to a wide variety of systems, applications, and infrastructure. And actually managing that is no longer viable. And the issue with that is that actually, managing that in a manual workflow is no longer tenable, and also the infrastructure that's been used for that purpose is no longer fit for purpose. So these malicious actors, as they frequently do, target the path of least resistance and the target third-party access. So the issue here is about understanding where the vulnerabilities are and being able to address them and do that really quickly, because a lot of these organizations are experiencing these kinds of threats day in, day out.
So you mentioned, the growing risk landscape around third-party assets, and you said vulnerabilities. Can you walk us through some of the key vulnerabilities that banks face when extending access to partners, vendors, software as a service tools within the embedded finance world? What are some of those key vulnerabilities and risks?
Well, the most principal thing is that third-party access is not really subject to the hardened layered security that we see on in consumer access. So it's very rare to see that we're deploying strong customer authentication and multi-factor authentication as dynamic. There's still a huge reliance on passwords. And, I've got some stats here to back this up, Andrew. We have kind of discerned that over 54% of all companies have suffered a breach as a result of third-party access vulnerabilities. And 40% of those involved compromised credentials. So the bottom line here is that we're not applying the same rigor to securing third-party access as we are to securing customer access. And so, for banks and financial services institutions more widely, we cannot just invest in securing customer access. We have to secure all forms of identities. And this is really high up on the agenda right now, particularly if you look at the DORA regulations as well in the European Union landscape. DORA stipulates that financial service providers have to secure third-party providers and suppliers to their system. So this is no longer just a nice to do. It's now mandated by regulation, and it's kind of becoming table stakes, I would say.
And so you mentioned identity being the new security perimeter, and you have spoken about this at our own conferences as well. What role does identity and access management, IAM, play in modernizing how banks can handle third-party access? Is this a wrapper that they can put around everything, internal, external? Does it bring all the silos together?
Well, that's a good question, actually. Does it bring the silos together? Let's start off with that. That's a loaded question, Andrew. Does it bring the silos together? We kind of see that actually the bigger the financial services institution, particularly in retail banking, the more of a siloed organizational decision-making landscape that you face. And actually we find that converged identity, and I say converged with intent here, converged identity is really a mechanism for breaking that down. and for forcing holistic thinking, because you can no longer think about these things in isolation. As an example, in the fraud landscape, you can't just think about upstream onboarding, identity access, and KYC in isolation to what happens downstream in the user journey. Likewise, you can't just think about what happens in customer journeys. You have to think about how that kind of maps across to workforce access and third-party access. And we are seeing analysts in the industry, particularly Gartner and Cooper say much more about third-party access. And we're seeing vendors develop new capabilities in this space, Ping Identity being the leader in this space, where we were trying to not just really think about how third parties can access resources, but also what happens once they're in the systems, when they're in the applications. And Andrew, always think of this analogy, identity is not just about what you do to get into the house, right? It's not just the front key to your door. It's actually what entitlements and rights you have to access facilities within the house once you're inside it. Okay, so it's no longer just about authentication, it's about authorization. And so all of a sudden you've got these complex capabilities, use cases, and that's precisely why financial service providers that we're working with are really embracing this notion of converged identity. Can I have a platform that can help me deal with the whole cycle end to end, whilst at the same time delivering an acceptable level of service? So those are just some of the driving factors, but there's much more.
So what are there best practices or frameworks that banks are putting in place to manage this securely, but without sacrificing usability? Because I know that the minute you start talking about, secure customer authentication and things like that, just from a customer perspective, we're adding lots of friction. And it's a complex thing. And as you said, it's not just can I come into the house, it's what can I do when I'm in there. That's also very important. Ping Identity is leading the way in this. So do you want to, I'll give you a short opportunity to do a bit of blurb about what you guys can do to help in this space and what best practices are there.
Yes, I think the key thing, we kind of refer to this as third-party access. That's kind of baked into our Ping Identity platform offering, and in that particular capability offering, we don't just think about how third parties can access data, services, resources, applications, but we also think about the relationships that underpin that. And the reality is that in financial services setting, we're not operating in a monolithic organizational entity. We're frequently operating in a multi-organizational setting. We're operating across multiple organizational and jurisdictional boundaries. So you really need to have exactly. So you need to have a really, really well baked what we call relationship model to be able to determine which entities within that context have access to what resources. And you also need to have a high degree of what we call policy-based access control, also referred to in some circles as a fine-grained authorization, to actually enable you to say, you know what, we have certain access policies that we can leverage in conjunction with third-party risk signals and in conjunction with our relationship model to actually determine who has access, not just to these applications, but once they're in the applications, what provisions and entitlements do they have, right? Rather than giving everybody a blank based access or role based access has been traditionally the case. So we are seeing that more and more of our customers we're really sensing the urgency behind their intent to really kind of modernize how to utilize these services to meet their agenda. And just to give you an example, I was at one of our customer advisory boards last October. We were talking to some of our blue chip customers in EMEA. One was a telecommunications company. Now, I know this is not a banking customer, but comparable size, scale, and level of challenge. And this individual told me that within their identity landscape, third-party access represented over 2/3 of the risk profile. And yet they didn't have a dedicated team. They didn't have dedicated infrastructure to dealing with that third-party access. They were using their workforce team and they were using their customer access team to kind of manage it in between using legacy. Now, that's quite striking. And when it comes to banking, yeah, sure as hell, I hope that my bank's got third-party access in place. Otherwise, I'll be going to the alternative providers who can secure me. So yeah,
exactly. I mean, okay, so that is a great example of how not to do it. Have you got any other anecdotes about common mistakes or oversights that you've seen banks make when trying to trying to secure third-party access? Do they commonly just do role-based access, and at the moment it sort of falls in this grey area where third-party is neither inside nor customer? Uh, other common mistakes, oversights.
Yeah, I mean, I guess, if you roll this up, the key thing is the key mistake is not future proofing, right? You're building something that fits your reality today, right? Where you have nth degree of third parties operating your ecosystem. Like in 5, 10 years time, that nth degree of separation is completely different, right? The environment is completely different. We know in the future we have agentic AI on the horizon, right? I know we'll talk about that in a second. There are different entities. So this is not just individuals, but it's entities, its APIs, its machine identities, and it all needs to be not just authenticated, but they need to be authorized to have access to certain information at a point in time. And so I think being really kind of future driven in this space is really important. The biggest banks we work with, their investments are for the next 5, 10 years. Like they see that identity is not something that's a short term gain. It's a long term ambition, long term endeavor. And so I would say those that have that mindset are successful, and those that do not kind of tend to struggle.
That is a brilliant segue to the next question that I'm about to ask you, because you were talking about what information the entity would have access to, but it's also potentially what that entity can do in terms of decisions on behalf of not just access information, but actually to start making decisions. Because I published a blog this week about agentic AI, but not from the bank's use of agentic AI. I believe that in the not too distant future, customers will be using autonomous agents to interact with financial services on their behalf. Now, how do you see this changing the concept of identity and access management? Because is my bot me? And can and should my bot be treated the same way as if it was me as a human accessing? Or do you need to treat it differently because it is my bot acting on my behalf? Surely this turns the whole world upside down.
Yeah, 100%. And look, I speak to decision makers in the industry on a regular basis, and everyone's talking about agentic AI. And actually, unsurprisingly, we at Ping Identity, we are actually moving in that space, in that direction. We've got some marquee conferences coming up over the next few weeks, Ping Universe, where our leaders will be talking exactly about this. And so the way I see it, agentic AI, you have those agents that you can deploy on your behalf, but also those banks, in particular US retail banks, we're seeing this. They're looking to differentiate by offering their customers their agents, right? So there are your own agents, and there are agents that the financial service provider provides you with, right? In both cases, it's really important to be mindful of what authorization and entitlements we give to these agents, right? I don't want to be giving my personal AI agent blank access to all of my financial details, right? I don't want to be giving that agent access to my personal information. I
Well,
want that agent.
certainly not the way that some of them are hallucinating at the moment.
Yeah, that's for sure. That's for sure. But you just don't know where the technology will evolve. So it's really important to understand, first of all, define an agent as its own identity, right? So it's an identity that has to be managed, that has a life cycle, that has access permissions. But then within that, again, using that same analogy about authentication being front door to your house and authorization being everything that happens after you're inside a house. How do you authorize agents? How do you set up entitlements and be able to give that agent, for example, if I'm applying for a remortgage, can I give an agent access to my credit underwriting application to get my credit rating? But can I give that access for a time limited period of maybe a week? Can I only give access to that agent to look at my credit score rating rather than look at the entire file that sits underneath it, right? So this is where authorization and policy-based access control plays a huge, huge role. And that's not just within the context of the agents that we'll be able to use, personally on that will work on our behalf, but also banks and financial service providers, they have to enable those kinds of capabilities and features to our customers. Again, if my bank is saying they're going to give me an agent and that agent just has blanket access, I am not going to trust my bank. I'm
No.
going to take my business elsewhere. Simple as that. Most likely to a fintech, right? And incumbent providers, particularly in banking, realize there's a huge risk if they don't wake up and start offering these capabilities and start, enticing, particularly the younger generations that I expect that as standard. They're going to lose business. So this is kind of an existential threat. It's also, I also read an article a few weeks ago around good agents versus bad agents. And
Yeah.
then there's this kind of notion there that in the future, you might have policing agents. Like imagine the policing agents could be roaming around in the ether looking for the bad agents that are over provisioned and trying to flag that up and trying to close their access. So this is also invariably going to become an attack surface.
Yeah.
Malicious parties are going to try to exploit vulnerabilities in that space. So it's a security thing, it's a competitiveness thing, it's also a differentiation customer experience thing. So yeah, no wonder this is going to be an exciting space of change.
Absolutely. Now, do you think our current regulatory models, you had mentioned DORA earlier on, but GDPR, PSD2, DORA, what's going to need to happen? Are they prepared for the shift to these non-human identities? Are they lagging so far behind? I mean, they're only just grappling with the EU AI Act at the moment. This whole concept of agentic AI has erupted since in between the time of them drafting the paper and publishing it. What do you think is going to need to happen there? And do you think our current regulatory models are ready for this?
Well, it's a good question. I mean, from my perspective, no, not really. There's going to be a whole new raft of regulations and technical guidance for providers. It's really interesting to see, when we get more clarity on PSL1, PSD3, whether that will feature prominently in there or not. I mean, it wasn't part of the PSD2 review scope, so one would presume that it wouldn't. To my reading, we've not really seen that much of a focus on the AI Act on AI agents, and the reality is that this landscape is evolving very rapidly, not just from a technology perspective, but also from a commercial and a use case perspective. So how are AI agents going to be used to drive business for banks, and what kind of commercial models will be developed, and how will that be monetized? So there's a lot to think about, and I guess regulators, I would always say, are always a little bit behind the pace of change that retail banks set in the industry. So yeah, I think this is a very interesting space from a regulation perspective.
It is. So I'm going to wrap it up by asking you one final question: that if you had to make a bold prediction, what's one thing about identity and access that will look completely different in the banking world 5 years from now? And the reason why I'm choosing 5 years is we're talking about payments in 2030 at our upcoming banking scene barbecue. So 5 years, 2030 is 5 years ago. What's the one thing that you think might look completely different in 2030?
Oh gosh, I mean the pace of change is so rapid. Where do we begin? First of all, I believe that authorization is going to be table stakes when it comes to fraud prevention and managing access across all different identity types. That's number one. I predict that investments in identity security and converged identity are going to grow. I also predict, and this is not my prediction, but one made by Forbes, that most big banks are going to have a chief identity officer sitting in a C-suite, because identity is no longer just a security discipline. It really envelops multiple walks of life. I predict that maybe the most progressive banks are going to be dabbling their feet into decentralized identity, looking at how wallet-based credentials, identity verification can actually help them to unlock new value to customers, can help them to strengthen privacy and also strengthen security. And you see in the European landscape that the advent of the EIDAS 2.0 and the timelines that member states are under to offer a digital wallet by July 26, and very large online platforms will have to follow that suit soon thereafter, and others. I think that's going to be a real game changer. So I think it's an era of innovation, and as such, I see that in this space, from a competition perspective, you're going to have this kind of further separation between those that invest and get ahead and differentiate for these experiences, and those that stay behind and start losing and hemorrhaging business. From a security perspective, I mean, the entire landscape continues to evolve, right? So identity is a security discipline. It's also a customer experience discipline. And as we move to decentralized identity, the entire game is going to change. I mean, ultimately, we'll have all the credentials on our mobile phone, on a digital wallet, and we'll be able to share attestations with service providers, these being vouched by trust anchors, new trust anchors in the financial services industry that will actually say, you know what, Andrew is who he claims to be. You don't have to divulge all of the information to perform action A, B, and C. And so when you start looking at decentralized and agents and that entire shift in the competitive landscape, you're really kind of seeing a new form of particularly retail banking. That's where we're going to see this change emerge. So yeah, very exciting time, I think.
Fabulous. Thank you very much for sharing your insights with us today, Adam. That has been absolutely brilliant. Cheers.
Thank you, Andrew. Great to be with you.